Again, a lot of things to talk about here on this week's Cattle Call as the entire market is back to work after the 4th of July holiday. And we'll talk about what sort of an effect we are seeing because of that already here this week. Cattle Call is brought to you by the Nebraska Rural Radio Association and sponsored by Wolf Auto, small town strong. Once again, joining me for this week's analysis, it's Brad Kooima, Kooima and Varilek at Sioux Center, Iowa. Brad, let's start like we usually do and just kind of recap last week's trade. And again, kind of an asterisk by last week's trade, right? Looks like a little bit smaller volume, but granted, it was a holiday week. What are the takeaway messages from last week?
Well, it was first of all, thanks a lot for having me on, Chad. I enjoy and appreciate this deal. So last week was really depended a little bit what day what day it was and where you were on that day. The north, which would be where I sit, we traded a handful of cattle at 232, then 3, and then a few at 4, and then just a tiny little bit at 235 to one of the regionals up here on Thursday. That would have been. And the south, on the other hand, was all over the place. You had a few of the regionals that were dipped down in there, paying some, 230 or something like that. Some of the other trade was down at 225 to 228. But to summarize it, I would say that it was better than expected for a lot of people. We were in this. You and I joked how we had the streak going where cash was higher every week, and we were talking about another new high on for the futures move almost every week, it seemed like. And then we'd stopped that. We'd had about a 3-week break in the cash market. And I know some of us, me included, were thinking, oh boy, okay, well, it's July. It wouldn't be the first time we softened up a little bit, and we'll see if the backer gets a little more leverage back. So super impressive week in that regard. That, once again, that word leverage comes up for me, and that is largely dominated because the North is so current and so tight of supply that we're able to, shake our head no to some of these bids after a couple of weeks of lower, and then held out and got higher money. The other factor, I think, under the market is still that there is less captive supply for a lot of these pipelines that normally feed into the commercial. I think that pipeline is much smaller, and that's forcing some of these packers to have to compete, and that creates leverage.
All right. Now, back to what the comment that I started with, the fact that we're back to a full trading week, and it feels like we have a full complement of people in the market again. And could you argue that that's what's happening maybe in the futures as we come back after Independence Day?
Oh, I think you're certainly onto something, Chad. I agree with you completely, both from the standpoint of all right, we're all back to work now, and we're all focused on, what the news is now. And the other thing, even maybe more complementary to that, is you got, coming into the first few days of a new month, you got a fund and a new quarter. You got a fund community that's made a bunch of money on the long side of the cattle. These kind of big bull markets die hard because it's, these guys are pragmatic. These fund managers, seriously, and most of them don't know the difference between a steer and a heifer. Okay, it's worked to buy them, and so if it keeps working to buy them, they keep buying them until it doesn't work. Now, if I could figure that out, there wouldn't be any time for podcasts, right? But I mean, that some of it is a self-fulfilling type of a situation, where it works until it keeps working because they continue to do what has worked for them over time. And someplace along the line here, Chad, you got to throw a little word in here about basis. I mean, this futures thing has been discounted so long that we've almost gotten used to it. Some of this rally here has to be a little bit of, maybe we could finally get a little convergence and get this futures market a little closer to the cash.
Yeah. Now, we do have a little bit of time to do that, right? Before these two things come together. We don't have to do it in 1 or 2 days, but the market really does need to see that come together at some level at some point, right?
Well, I'd sure like to see it. I'd like to see the CME take a hard look at what things they maybe could do to ensure that we get better convergence. The month of June stayed crazy until about the last 4 minutes. And then maybe we had some convergence with the South trade. Never really did have much convergence at all with the Northern trade because we're such a big premium in the North. But there, if you could force a delivery to take a delivery, you would have immediate convergence. But that's a stretch, because most of the hedgers like this discounted thing like this. I think it has a tendency to hurt the cash market, because people are easier sellers than they would be otherwise, because the basis is so attractive that they say, okay, I'll take lower money because I can cover my hedge and literally this basis is like almost $20 for a while earlier in the week, and that's wild. But anyway, we're getting used to it because I think the market's telling you, Chad, that, okay, we believe it's okay today because there's no cattle and we're current and the cash market's really strong and everybody's falling all over themselves to get cattle bought, but it won't last. I think that's what the futures is saying, and I'm not saying that's necessarily where I'm at, but that's what the futures would tell you. And that's why there's such a big discount. They're just thinking that, well, something's going to change and we're going to get a setback, and probably rightfully so from these levels.
Sure. Let's talk a little bit about some of the comments that we had from last week's program. And we had a listener and a viewer put in the comments, and this goes to a headline, the fact that tariffs continue to be a topic of conversation in the markets, not only for cattle and livestock, but over in the grains as well, but kind of made a reference to somewhat tongue in cheek, saying it's a good thing we have this tariff talk. There's nothing else to move the markets right now. I might not agree with that. As a matter of fact, I don't, but I want to get your take on it. What do you think the market is chewing on right now? Is it more than just tariffs?
It's I feel this person, I feel the pain. Okay. I think he's being sarcastic, or she, I think I can understand a little bit of the question, because, in some regard, I share some of that same frustration. In fact, I don't know, I've said many, many times that every day when I go home from here, there's a chance that some news could come out tonight that would make the market go down the limit tomorrow. Now, is there a chance that there'd be some news that maybe would make the market go up the limit? I don't know. Tell me when that's happened. I don't really remember. That's been, it's very unusual. In other words, we've become so sensitive to this black swan type stuff, right? The listener is correct, though, that there is plenty of things to worry about. And one of the things, once in a while, I get caught saying that I'm not sure what the market's trading. And what I mean by that is, first of all, that I'm not that smart, but that the market sometimes, for instance, if the market cared about average weights, the market would not be trading like this, because the average weights are crazy high. Okay. Mm-hmm. And a big uptick again this week, which would say that it doesn't look like we're as current as we thought. But the market's not trading that. Right now, the market is trading the fact that there's less cattle, there's less captive cattle. We've got leverage, and so far we've dodged the bullet in terms of haven't even got a reaction really out of the border reopening. 30-minute wiggle, remarkable strength. The tariff thing, now we've kicked that issue down the road again for roughly 30 days. Every one of these things that this guy has mentioned, or person has mentioned, is real and has potential. And so here's the old guy on the podcast is going to say, hey, cattle people, let's use our head at these levels. Now, do I say you got to be 100% hedged? No, but they got something called put options. We've been pressing that forever here, stay friendly and buy puts. Just make sure that you're being business-like up here at these levels, because there is so much that can go on. And I worry that we finally made it through a Tuesday, by the way, without, after 4 or 5 in a row of some rumor. The market from these levels, it's going to react much, much more. There's a little sticky note up here on my desk, up on the stairs, down in the elevator. And that's how the market is, whether you like it or not. And I know people don't like the market, but it's not going to go away. So you might as well either react to it or then walk away and ignore it.
Yeah. And I've said the same thing too. It's the market gives the producer the volatility in order to do risk management. You need to take advantage of it when it is there. If you have a comment, if you have a question that you'd like us to talk about, be sure and put that in the comments below. Oh, and while you're down there, go ahead and click that notifications button. That'll let you know when the next cattle call comes out. Brad, what are you thinking about this week? We're starting to see a few bids, a few asking prices in the south. I think it's been pretty quiet here in the north, but what do you think, again, with a full complement in the market for a full trading week here, what are the keys to cash trade for this week, do you think?
Well, one key is competition, and from what I'm picking up on that, it sounds to me like there's some packers that have gotten themselves pretty close to the knife, burned up some inventory, if you want to call it that way, and are going to need to participate. That's a great sign. Right now, asking prices of the people that I've talked across northeast Nebraska and up in my part of the world, up here in northwest Iowa, we're going to start someplace around 240. Like I said, 235 was the scratch top last week. Now, will we get to 240? Feels like a bit of a reach to me, but I sure think it's going to be higher. And what I'm guessing maybe tomorrow is we're going to be sitting here with a 238 bid perhaps and deciding whether we should take it or not. It's hard to pass those kind of bids. I mean, realistically, that's those cattle make lots of money that way too. So, but it feels like it's going to be higher. We'll see if the South can gain on us a little bit. It doesn't feel to me like Texas has got overwhelmed with numbers by any means. There's maybe a few more cattle in Kansas, but I would expect that they should be able to narrow that spread up a little bit with us, Chad.
Okay. And then just one other thing too, we do have a WASD at the end of the week, and I know that's focused on grains a lot, but there is some livestock production data in there. I'm thinking production export numbers, they get updated. So that'll be valuable information to look at too, right?
Yeah, I should have prepped different for this because those export numbers next to make a note. We talk about exports and imports. There's a gross imbalance right now. And again, the market's not trading that either. But we have just overwhelming numbers coming out of Brazil of imports and another trade where another month just where we got the data on yesterday of where we imported a lot more than we've exported again. So let's keep an eye on that, in terms of whether it's going into cold storage or whether it even shows up exactly where it's at. But usually we don't talk about that a lot, but this is not a usual market either.
That's right. Brad, it's good to have you on the air. Thank you so much. I appreciate your thoughts and your insights into today's market. Again, that's Brad Kooima and Varilek there at Sioux Center, Iowa. And you can get a hold of him. You can go to their website right there on the screen, kkvtrading.com. Also call them at 712-722-0023. They'd love to have a conversation with you. That's today's Cattle Call, joined again here on the Rural Radio Network. It's brought to you by Wolf Auto, Small Town Strong. Have a great week. We'll see you on next week's Cattle Call.